Bloomberg Audio Studios. Podcasts, radio, news.
This is the Bloomberg Surveillance Podcast. I'm Jonathan Ferro, along with Lisa Abramowitz and Anne-Marie Hordern. Join us each day for insight from the best in markets, economics and geopolitics. From our global headquarters in New York City, we are live on Bloomberg Television weekday mornings from 6 to 9 a.m. Eastern. Subscribe to the podcast on Apple, Spotify or anywhere else you listen. And as always, on the Bloomberg Terminal and the Bloomberg Business app. All eyes on tomorrow's CPI print, the first major data release in weeks, expected to show inflationary pressures mounting on the economy. The former Boston Fed President Eric Rosengren has seen it all. He joins us now for more. Eric, welcome back to the program, sir. What are you anticipating to see? What do you expect to see tomorrow morning at 8:30 Eastern Time?
Expecting to see that both the CPI and the core CPI are at 3.1%. So for the overall CPI, it was at 2.9% before. That's a bit of an increase. It partly reflects some of the pressures coming from tariffs continuing to flow through. So goods like apparel, furniture, sporting goods. But it's also that we're seeing food prices go up in a variety of areas. And I think that indicates that we're not getting much progress on inflation, that this report actually is going to be a continuation of numbers that are at 3% or higher rather than moving down towards 2%. So that is a challenge for the Fed as it tries to weigh how much emphasis to put on inflation and how much emphasis to put on what's happening in the labor market.
Well, Eric, let's stay on that theme. Are they sources of inflation that this Federal Reserve can ignore?
I don't think it should ignore. The labor market, while it has been softer, is still fairly close to the Fed's estimate of full employment. And in some of the areas, both in food prices, we've seen cost of electricity going up. Some of those trends, I think, are something we have to keep an eye on. And while there have been some negative pressures, for example, shelters come in a little bit better, natural gas is likely to come in a little bit better. I think the overall package, I mean, we've been above the 2% inflation target for over 4 years. So at some point, the Fed has to start seeing some improvement in inflation. So I would not be somebody who would view this as because it's partly coming from tariffs that it should be ignored.
Eric, is a lot of this inflation policy induced?
Well, I think it is partly policy induced. It's certainly fiscal policy induced. So tariffs definitely have an impact on what the reported prices are going to be. I would also say that the immigration policy is a policy that probably means that some of the food prices have gone up as labor costs have gone up for people that are trying to harvest crops. And fruits and vegetables have been an area in particular where we've seen rising prices. In terms of monetary policy, I think the question is how much of the pressures that we're seeing have been accommodated. So the Fed thinks it's restrictive, but if you think that the economy is more productive and that AI may contribute to that productivity, then it's a little unclear that we should be going back to the same interest rate that we were at prior to the pandemic. So the summary of economic projections that the Fed puts out is assuming that we'll see something, Fed funds rate in the long run closer to 3%. So that would indicate a lot more room. But the fact that we've seen so little progress on inflation for the last 6 months indicates that you shouldn't be so confident that you know exactly what the real interest rate ought to be.
Well, not only that, the fact of the matter is the Fed will be sitting down and they won't have the labor market report. They're just going to have this inflation report. Do you think it's a mistake if the Fed cuts interest rates next week?
I think that given the softness in labor market, I can understand a 25 basis point cut. I would highlight that while we're getting the CPI report, a lot of government workers left their jobs at the end of September, and a lot of the source data may not be available. So this CPI report probably is going to be using more estimated results than normal. It will be interesting if the report highlights that this data may not be as reliable, which means it could be noisier noisier. And if it's noisier, it could be a surprise on the upside or the downside. But it just says, as we continue to have pressures on statistical organizations having enough people to gather the data, that this data may become noisier and harder to rely on.
Eric, forgive the snark, but how reliable was the data when we had it?
Sorry?
How reliable was the data when we had it?
I think the CPI report was a pretty good report. So, I mean, they had significant amount of surveys across the country. They have had to cut back over time on the amount of survey work that they do. They've closed some offices. So I think that over the last few years, it has deteriorated a little bit. But I think if we continue to be cutting back on statistical agencies, it'll get more unreliable as we go forward.
Stay with us. More Bloomberg surveillance coming up after this.
So here's the latest this morning. The president imposing significant sanctions on Russia, targeting the country's major oil producers. In London, off the back of these moves in crude, Sarah Bianchi of Evercore ISI joins us now for more. Sarah, consequences and objectives. Let's talk about objectives first. Does this get the president, the leader of Russia, to the table?
We'll see. Obviously Trump has been very frustrated with his inability to, kind of make this happen and settle this down. He's obviously looking quite, really anxious to make progress on this. Certainly this is a key step. This has always been sort of one thing that folks have thought would bring Putin more to the table, but we're going to have to see how long it holds, how serious it is, how effective it is. And, until we see how this plays out, I think we should withhold judgment.
Sarah, how do you think this is going to play into the trade talks the president's going to have with Xi Jinping in South Korea?
Well, it's interesting. I think that the United States and China have a lot of other issues to focus on right now. The anxiety and the escalation has been around something different, much more about rare earths and export controls and trying to keep these tariffs down. So it's a lot to really try to introduce this and to get China to take steps on this. I think if the agenda expands to this in an aggressive way, China will come back with questions about Taiwan, and I think it's not very likely that we'll see a lot of progress here.
The Trump administration is weighing export restrictions against China when it comes to critical software. I asked Everett Eisenstadt this in the last hour, and I'd love to get your take. Is this tangible policy, or is this a new leverage point that the U.S. wants to use just for a negotiating tactic?
Well, we've certainly heard that in the government, everybody's been asked to sharpen their pencils and to find different aspects of things in the export control space that would really make China anxious. So, look, I think if that's where the talks go, we're going to see China push back pretty hard on rare earths. I think they feel very aggressive and confident right now in that space with good reason. So I think if we're in a space in this talk where we are introducing new things, that's not a great sign. Perhaps it will help some with leverage, but I think we all have to watch carefully because I think China is feeling quite bullish on this, and the risk is really that we overplay our hand.
Do you think then that China has more leverage going in than the United States does?
I think both of these great economic powers both have leverage. And I think what's unique is that when the Trump administration negotiated last time with the Chinese, they didn't find that there wasn't this dynamic in the conversation. And so I think it has been a little bit of an on-the-job learning for some in the administration that China is willing to play as aggressively. So I don't know.
Well, they used rare earths back in May. Are you talking about when it was just down to agricultural purchases and Trump won?
Yeah, I'm talking about in Trump 1.0. I think one of the reasons that the Chinese came out so strong with rare earths this time is they found last spring it worked really well for them. And so I think they are I think they were hoping to get more out of the talks than they saw coming, and I think it was pretty explicit strategy. I'm not quite sure they meant to overheat things quite so much, but I don't know. I think both sides have something the other team wants, and when you're in that situation and feeling out those relationships, there's risk for escalation.
Stay with us. More Bloomberg surveillance coming up after this. Another name, of course, is Tesla. Profit falling, rising costs undermining a record quarter for vehicle sales. The company reporting adjusted earnings down 31% from a year ago. Dan Ives of Wedbush maintaining an outperform rating on the stock with a $600 price target, saying we continue to believe Tesla could reach a $2 trillion market cap in early 26 in a bull case scenario, and $3 trillion by the end of 26 as the golden AI chapter takes hold at Tesla. Dan Ives joins us now for more. Dan, how relevant is the car-making business at Tesla to this stock, and how relevant should it be?
Look, I mean, it's foundational relative to, obviously what they're doing in the quarter and of course, generating cash in the business. But the reality is the future is around AI. It's around autonomous. It's around robotics. I think it's the most important chapter in the history for Musk and Tesla. That's why Musk, now wartime CEO, and obviously a new pay package. And I think that's what investors are focused on. Any sell-off here, look, we view autonomous alone is worth $1 trillion of the story. This will, along with NVIDIA, be two of the best what I view physical AI plays in the market.
Dan, I think a lot of people might agree with you that autonomous could be worth $1 trillion to someone. It's about whether it is for Tesla. What can you point to that demonstrates success? What are the metrics you're following that justify a valuation that this company currently carries?
Yeah, first off, robotaxi, we've seen it in Austin ourselves. I think that you'll have 8 to 10 cities by the end of the year, and we ultimately believe 30 cities in the first half. Then you ultimately look at what's happening there, the geofence area, the safety driver getting removed. It's my view this is all heading toward level 4, right, in terms of when you think about autonomous. And what that means is no company in the world, BYD, pick any name out there, will have the scale and scope to compete with Musk and Tesla when it comes to autonomous and cyber cabs. That's the future. And then Optimus, I believe is going to be, a key part of this story. That's how you're going to get to $3 trillion market cap next 12 to 18 months.
But scale and competition, isn't this space, Dan, already looking very crowded?
Look, I'd say, crowded in terms of Waymo being first mover advantage, but they're in, 5 cities, relative to from a scale perspective. I think Tesla's going to own 80% of the autonomous market. And that's why, from an investor perspective, look, if you hate Tesla, you continue to hate it today. I get it. But the reality is that this is a golden age for Tesla looking ahead, from autonomous to robotics. And that's why you talk about November 6th, what's going to be the must pay package, and then they're going to own obviously a big piece of XAI. This is now the AI transformation happening at Tesla. Cars obviously are important, but that just sets the stage for what I think what's going to be a historical move.
Well, let's talk about the pay package. Elon Musk had some very colorful language yesterday on the call when it comes to the proxy advisors for some of these institutional investors. What does he need to achieve in order to get that headline $1 trillion pay package?
Yeah, and look, and go back to the first pay package, the one that's right now caught up in Delaware. He did everything and more, and it just comes down to I agree in the fact that the biggest asset for Tesla is Musk. Musk is Tesla, Tesla is Musk. Look, obviously some of those are very ambitious in terms of, where they're ultimately going to hit in terms of the targets. But I think mid to high targets are hittable. And that's why incentivize him, make him wartime CEO. That's what he's doing. That's where his laser focus, versus maybe some of the, dark days when he was with Trump administration, obviously some of the brand damage. And I just think betting against Musk has been the wrong move again and again. And I think that's why shareholders overwhelmingly will approve this.
Dan, let's just stay on the pay package. What's the opposition to the pay package? What's your understanding of what it is? Beside the fact that it's absurdly large, that kind of doesn't matter. What's the opposition to it? What don't people like about it?
Look, obviously it's just, the view from an excess perspective, the actual numbers, why do they actually have to do this? But I think to some extent it's investors that don't understand the Tesla story. And I think any of the core believers, any of the core followers understand that the future of Tesla lies in Musk being CEO. And I think from a pay package perspective, given the targets, set high bars. That's where you want Musk to, you don't want to set low bars. And I think the board stepped up, Robin stepped up. This is the right pay package at the right time for what's going to be what I view as a golden chapter for Tesla.
Stay with us. More Bloomberg surveillance coming up after this. The S&P 500 achieving 33 record highs this year, boosting bank profits and pushing the Wall Street bonus pool to new heights. The New York State Comptroller, Tom DiNapoli, saying, quote, while uncertainty remains around interest rates, inflation and the broader economy, Wall Street looks to have another strong year. Tom joins us now for more. Tom, welcome to the program, sir. It's good to get some time with you. Let's just talk about how big those numbers are so far this year and what kind of benefit that provides to the state of New York.
Yeah, the numbers are big, and we look at this closely. We monitor it because obviously revenue for New York State and New York City significantly is derived from what's happening on Wall Street. So we always do an annual report this time of year on the securities industry in New York City. What we find for the first half of this year, profits of $30 billion. So when you consider last year, for the total year is about $49 billion, we could be headed for a record. If the current trends continue, we could be talking about profits of $60 billion this year.
Tom, is there a risk that we take that for granted? As you know, and I'm sure you're following, we've got a mayoral race here in New York City, and at the top of the polls is a socialist. Now, Tom, it's amazing that in the beating heart of American capitalism, we could have a socialist mayor. Is that something we risk taking for granted?
Well, look, New York City, New York State is quite resilient. So between what may happen in New York City and what's happening in Washington, New York City is going to stay strong. What I think is key in all of this is that New York must continue to be the global capital for finance. And what I always say to my friends and neighbors in New York, however you feel about Wall Street, good or bad, the reality is the services that we provide to the people of our city and our state significantly rely on the profits of Wall Street, the business taxes, the personal income taxes that are generated, the employment that's generated. So whatever's going on in the larger politics, we want these jobs to continue to be located in New York. There's still more jobs in securities industry in New York City than any other city in the country. We've seen, last year we saw some growth in jobs in New York. This year it looks like there might be a slight retrenchment, but this is a win for New York State, and no matter who's going to be the mayor, no matter who is the president, no matter who's the state controller, Wall Street, we want this to be the home right here in New York because we all benefit when Wall Street does well.
Wall Street does, but does a future Mayor Mamdani want it to be? Do you think he's a possible threat to the securities industry's tax revenue if these individuals want to leave New York?
Well, look, we already have an issue of taxpayer migration having nothing to do with the current mayor's race. That being said, when we look at our revenue picture, we do a monthly cash report, we call it, revenue coming into the state. We continue to have tax collections, largely because of personal income tax revenue, exceeding projections. So I know there's a lot of folks predicting gloom and doom, but so far, actually, the money, because of strong personal income tax collection, coming in higher than projected. And certainly to the extent that, again, the election's not happened yet, but if the new mayor has some ambitious goals as far as addressing affordability, more services that need to be paid for, I think whoever the mayor is going to want to see Wall Street to be profitable and strong and benefit from the taxes that will derive from that.
You also have come out with a statement about Elon Musk's latest $1 trillion pay proposal. You're saying it's excessive. But do you think Tesla would be successful without Musk? And there's a number of hurdles he needs to jump through to even look at this kind of pay package.
Well, obviously, Musk has been a very key ingredient in Tesla. I won't dispute that. But our view has been that the board oversight has not been as independent or as stringent as it should be. How many billions or trillions does one person need to make? And, my concern is that the compensation package, while it may have some broad milestones in there really should be more clear metrics and to really justify this very, very generous payout. I mean, how much money does one person need? And, it's been very clear from my perspective that some of the other activities that Mr. Musk has been involved in over recent months has taken away from his focus on Tesla. You've seen a lot of volatility, certainly in terms of the stock price. That's a concern to us as a shareholder. So we really would like to see more independence on the board. We're going to vote against the compensation package, going to vote against the board members who are up. I think that will make the company stronger if they would take some of our recommendations to heart.
If they take more recommendations to heart, would you vote for it?
Oh, sure. If they come around to our point of view in terms of independence and more clear metrics in terms of what kind of milestones would have to be achieved for a compensation package as generous as they're proposing, we'd certainly reconsider. But I think in terms of the dollar amount at this point, and when you would look at the concentration of stock ownership that Mr. Musk would have, would really continue to diminish any role that any other shareholders would have in say of the company. I think those are concerns. My guess is they are not going to come around to our point of view between now and November 6th when they have the meeting.
Tom, can I just press you on the number? Why is the number itself relevant? Surely if we establish the appropriate metrics and they're achieved, shareholders benefit from that. Why is the number so important?
Well, look, I think we live in a time where people are very concerned about income inequality, and despite the challenging times, I mean, coming out of COVID, still a lot of people in need. When you see the excessive compensation package, I mean, credit to Mr. Musk, he's already one of the richest men in the world. How much more rich does one person have to be? And if he is going to continue to be focused on some of these other activities that will divert from Tesla, it seems that we're not rewarding performance. Instead, we're rewarding power, personality. I don't think that's the smartest way for Tesla to be managed.
Well, I guess the way some people might counter that, Tom, is that if he doesn't pay enough attention to the company, he won't hit the metrics anyway, and he won't get the money. And isn't this about addressing that anyway? Because ultimately what you want is for him to pay more attention to the company. How do we go about doing that?
Well, I would question the metrics. I think there needs to be more specificity than we've seen thus far. And this is a board that, from my perspective, has operated more as a captive group rather than a truly independent board in terms of their oversight role. So I think it's a combination of more clear metrics in the compensation package, and I'd like to see more independence on the part of the board in terms of their oversight of the company generally. I mean, obviously he is very key to the company, but the company will hopefully be strong enough to survive one person, right? Who knows what the future is going to bring? And I think that's where, again, appropriate compensation and strong independent board oversight, that's what is needed here.
This is the Bloomberg Surveillance Podcast, bringing you the best in markets, economics and geopolitics. You can watch the show live on Bloomberg TV weekday mornings from 6 a.m. to 9 a.m. Eastern. Subscribe to the podcast on Apple, Spotify or anywhere else you listen. And as always, on the Bloomberg Terminal and the Bloomberg Business app.